a saying that Ben Graham wrote in The Intelligent Investor, that in the short term, the stock market is a voting machine. In the long term, it's a weighing machine.
All my cash flow from real estate goes back into real estate.
Another property.
It's either to buy more properties, it's to renovate properties, redevelop properties, and that's really it. I will use the money for non-recurring expenses. So if I want to go on an expensive trip, fine. If I want to go on buy a fancy car, fine. But I won't use my real estate income or any of my investment money to pay my recurring bills. What I mean is, it won't pay my home, it won't pay my car, it won't pay my health insurance, none of that. It'll only pay to go back into future deals.
And what's the life expectancy on an asset that you buy? Like, when you get into it, is it like, I'm holding on to this for life, or is there?
That's my philosophy. When I get into my properties, pretty much I buy them for life. Yeah, I will sell. I very rarely sell, but sometimes I do. But ultimately, I buy them with the timeline of forever.
But also, you can't take it too personal, because if you're doing something that other people have not done, for instance, the people around you probably have no investment portfolio at the time. Why would they understand? Why would they agree with you? Why would they say, yeah, go all in? Why would they say that?
Well, I believe there's two parts to that answer then. And the second part to that answer is, when you start telling people you're going to do something, it's not that people are necessarily haters, but there are a lot of haters in the world. They don't want to see you succeed in something that they ultimately would like to be doing.
I truly do believe with your story and your lessons and everything comprises of, and I want to read your book actually, is compounding. Compounding, like you said, you still buy the smaller deals, ultimately to get you to the bigger deals of buying deals that are north of $100 million, but compounding your investments, compounding your decision-making, compounding the relationships you make, compounding the key hires that you make, and just ultimately being consistent with that. Guys, welcome back to the Leaders Talk Podcast, right? The place where I'm your host, Jacob Pirong, and I interview leaders amongst every industry, from CEOs, athletes, politicians, executives, entrepreneurs, investors, for the first time today. For what, right? So that you could take a piece of everybody's success and ultimately apply it to your own. So if that sounds like something you like, feel free to stick along. But like I said, so first investor on the podcast. And I have to say, kind of like what I told you off camera, I'm very excited for this one, because in high school, kind of like what I told you, I had a period where I played football all my life, and then freshman year, COVID happened. I was like, The guy to the right of me is a lot more, especially going to St. Thomas Aquinas, this guy's like a lot more hungrier than me. I do work as hard as him, but he just has a different hunger that you can't instill in somebody. So you know what, let me start learning about something else. Let me learn about capital management, all this stuff. And so it's great to finally interview the first investor. And specifically, right, you have a capital management group that now has an 8-figure real estate portfolio. Also has a property management and a brokerage side of the company as well, where you've been doing this for 20 years, over 20 years now. Guys, it's my pleasure and honor to interview Todd Nepola, CEO and founder of Current Capital. Pleasure.
Thank you for having me. I appreciate it.
Thank you. So I heard on an interview that you had with James from the Hard Knocks, and he asked you, like, the question was, what was the biggest mistake or biggest advice that you'll give to entrepreneurs? And you said, find a mentor. And specifically, you gave an example where you went to a convention. It was Gary Report, right? Billionaire investor guy, search him up, humongous guy. And you waited for him. He gave like the business cards out. He gave the business cards to everybody. He was like, you guys all want help? Nobody's going to call. And then you were the one that was like, hey, look, I just want to ask you a question. You ended up going to his office in Virginia and then spent the whole day with him there. What did you learn that day? Because, I mean, obviously you learned you had to find the mentor quicker, but what was the actual stuff that you learned from him?
It's a great question. So the reason I wanted to stalk Gary was because he ultimately was doing what I want to be doing, and I am doing, but on a much smaller scale. So the goal of getting to him it wasn't just somebody in real estate. It was someone who does exactly what I do. He has a management company, a leasing company. He does syndications. He does private deals on his own. So he was basically me, just many years ahead. So when I got to his office, I had just like you list of questions I wanted to ask. I was excited to meet him. And keep in mind, I wasn't a young guy when I went to meet him. I was well into my mid-40s when I met this guy.
A couple of years ago, no?
Yeah, I can't remember how many years, before COVID. So I lose track of the COVID years.
Yeah.
But I'm in my mid-40s when I meet him. And the greatest thing I got out of it was that the illusion of what he had built became reality to me, because I saw my future company inside of his company. So whereby we have 30 employees, he has 100 employees. Where we have one floor, he has 2 floors in an office building. So I saw what my company could become, and it became real. And by seeing it and seeing he's doing the exact same thing, just on a bigger scale, and he's had more time, it made it that much more palatable that I could do this. The second greatest lesson I got out of this is even people that are billionaires are happy to meet and help. And, you know, a lot of people think that the more successful they are, they're too busy. But if you have a genuine need to get to somebody and it resonates with what they do, they're really willing to help you. So you got to reach out to people and ask them for help. And they really do want to give back and help. So I had a greatest date with Gary. And to this day, I'm still the biggest Gary fan.
Yeah. I think what you said, I really do agree with it. And I'm realizing now doing the podcast that a lot of people do want to help. A lot of people do want to be interviewed. A lot of people do want to give you their time to help you out if they see the hunger. That's usually how it works. If they see the hunger, if they see, oh, okay, I can see it. If it's not just like you would have went up to him, hey, I want to go to your office. Like, I'm sure there was a level of persistence there that you kept having to follow up with him, kept having to be a little bit persistent there. So was you looking at his company, looking at the company that you wanted to build and seeing the steps he took, seeing how many employees you did and kind of molding yourself to see, okay, this is what I need to do, this is what I need to get to become that level of business that he has?
Yeah, that's correct. You know, it's the greatest advantage is he's only a few steps ahead of me. So I could see my company becoming what his company is, whereby, let's say I was invited to go to see the CEO of CB Richard Ellis, and I walked in and they have 10,000 employees and offices worldwide. It's so far removed from what I do, it wouldn't have felt the same. But when I walked in his office, I'm like, we do the exact same thing. We're just smaller, but we're doing this. It made you like realize and have confidence that you're doing the right thing, you go in the right direction, and you're going to get here. Versus going to some monstrosity of a publicly traded company and saying like, how the hell are you ever getting here? So because it wasn't that far removed, it made it that much more real. So it's a step to take.
There's a powerful lesson in there. And I think you mentioned it on the interview that, I think it was James that mentioned it, that you wouldn't want to take advice from somebody you wouldn't want to trade places with. Mm-hmm. More than that, it was a realistic change because you saw, okay, he's not that far ahead from me. It's not, the dream isn't that far away. It's not really a dream. It's actually a couple steps away from being a reality. I also think that's important when a lot of people that are watching this are young, when looking for a mentor, when looking to people to model after. I mean, I read a lot about Warren Buffett. I just read everything, but I also realized that he's been doing that for 100 years, literally, 100 years. So you also have to find people that you can talk to now that are not too far off, but that you could learn from, that, as you said, they're a couple steps ahead from you, but a lot where you want to be.
That's right.
Going to Warren Buffett, there was actually a saying that Ben Graham wrote in The Intelligent Investor, that in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. Now, I say that quote because there's a lot of principles that apply from the finance world, from stocks into business, into real estate, into any other investment class. When you do look at an investment, what's the correlation? And this is coming out of curiosity and like the passion that I had for stocks. What's the correlation when you're looking at a stock or a business to invest in versus like real estate?
So that's a great question. I'm glad you actually asked it, because what I believe Graham and Buffett and all these guys are saying when they make that statement is the stock market is quarter by quarter, but that's not how life is done. And even if you judge your own life, if you say, you know what, I'm a little overweight, I want to lose weight, you're not getting judged quarter by quarter. You can give yourself time to do things. Unfortunately, when your company has to deliver earnings to the penny or get killed in the stock market, you're forced to make decisions more rapidly, and sometimes it's not for the better of the company. And a lot of times you hear about companies making decisions, publicly traded ones, that weren't really great long-term strategically, but they needed to hit their numbers. In my opinion, just my opinion, this also causes companies like Enron to lie about their earnings because they got to hit that number to get compensated. Versus being a private investor. When I buy a piece of property, my timeline is forever. So I'm not really interested in what happens to it in the next 30 days, 90 days. I don't have to report earnings like that. My question is, how do I continue to make the property better? How do I keep producing better tenants from this property over the long haul? Nobody's judging me every single 90 days to the penny. So that allows me a lot more freedom and flexibility to run a business, which is what a private business will always allow you.
I want to get more into the logistics of what you look at when you look at an investment, because I don't want to not bore people out, because I really do think you have I don't think it's rocket science when people like Warren Buffett are breaking it down in a simple, understandable manner. I think more what it is going to what Einstein said, compound interest is the eighth wonder of the world. It just takes time.
Yes.
Especially in capital management, money makes money. You have to have money whether you have a private lender, whether you're not borrowing from any lender. Like, it takes money to make money. Speaking about that, how long did it take you after starting the capital manager, after making some investments, to fully like live off of the free cash flow that you got from your investments?
So to this day, I still don't do that. I was doing that for a while because when I was in my 20s, I had enough cash flow and I said, this is what you do and you live off your real estate. And that was fantastic until 2008 hit. And when 2008 hit, I was not over leveraged. I had great properties, but tenants still struggled, which meant that the guy who was paying $3,000 needed a discount to $2,000. The guy paying $2,000 needed to go to $1,700 or $1,500, which is all well and good. I could still pay my bills, but personally, my income went down. So I started going through savings. So it was at that moment I decided I never want to use my real estate money to live anymore. So I started putting it back into real estate, and I live entirely off of fee-based, whether I'm leasing, commissions, brokerage deals, things like that. So I use all my real estate, like you said about compounding. All my cash flow from real estate goes back into real estate.
Another property.
It's either to buy more properties, it's to renovate properties, redevelop properties, and that's really it. I will use the money for non-recurring expenses. So if I want to go on an expensive trip, fine. If I want to go on buy a fancy car, fine. But I won't use my real estate income or any of my investment money to pay my recurring bills. And what I mean is it won't pay my home, it won't pay my car, it won't pay my health insurance, none of that. It'll only pay to go back into future deals.
Yeah, it actually goes back to something that Warren talked about when he looks at companies, and one of the indicators of like a company that is doing good that you should consider investing in is what the repurchase of shares, and that they're taking their own money to buy back shares, meaning they believe in their business. It's kind of the same correlation in a way that you're taking the free cash flows, and instead of, damn, I could be living off the 5, 10, 20, 50, 100K a month, but reinvesting into more properties to build up your portfolio, and over time, obviously, compounding. I want to get into that. I hope you guys find value in this, because I know it might sound boring, but I really want to go. Like, I'm really, really curious, because this is the first time that I interview an investor, of like what you look at when you do look at an investment property. Now, you could tell me how far I'm off, but one of the things Warren talks about is that he looks at a company. The 4 things is great management, buying it below its intrinsic value. What was another one? There's too many, he said. Competitive edge, and then understanding the underlying economics of the business. Now, he also talks about looking at a business, you project the free cash flow and then discount it back at a present interest rate. When you're looking at a property, do you calculate it based on like the down payment, the free cash flows, take the percentage and see what's a percentage of it, or what exactly is your investment philosophy when you do look at an investment to make?
So when I want to buy a property, and that's ultimately all I invest in is commercial real estate.
Yeah.
Because I also follow, Buffett's belief and Munger's belief, which is, put all your eggs in one basket.
Rest in peace, Munger, by the way.
and watch that basket carefully.
No.
So when I invest in a property, I'm looking for upside potential. And a lot of people, when they want to buy a property, they want to know, what does it produce now, and is it a good return? And that's a little misleading, because there's a lot of holes in properties that if you could fill, you could wind up with an extraordinary return. The edge that we have at my company is that because we do the management, we do the leasing, we do the redevelopment, we do it all in-house, we understand what the costs are, we understand what the possibilities is happening is, versus a dentist wanting to go buy a piece of property. He doesn't really necessarily know how to get all this stuff done. So I'm not as concerned with what the property is producing today versus what I think I could do. Can I add an out parcel and put a new thing? Can I throw out a couple of older tenants that have been there that aren't paying a lot of rent and bring in better tenants? So those are the kind of things I'm looking for.
So looking at the future earnings.
Absolutely. Future potential.
Because I was actually listening to a shareholder meeting that he was talking about. Somebody asked him a question. Hey, would you invest into a company right now or what's the minimum free cash flow percentage that the company would have to make for you to invest in it? Would actually invest in companies that are negative sometimes because of the future earnings that they have. Meaning, like you said, what if you have a non-recurring expense, right, and or R&D, something that they had to put a one-time expense?
I'll give you an example of that. So
no, go ahead, please.
We bought a property, and it was on paper, most investors would have looked at it and said, this is a terrible deal. But when we saw the property, the way the leases were written, they were all gross leases. They were under market. and the owner owned the building for many decades, and he just didn't care. So it wasn't comparable rents. The building had a lot of deferred maintenance, but we knew when we bought it, even if we paid this guy more money than theoretically it would have been worth as a cap rate return, we knew when we bought it, over the next 24 to 36 months, we were able to get all these tenants out or get them on current leases with the current markets, fix the property up, and at that point, it was going to be a home run. But going in year one, we were probably going to get virtually no return.
Yeah.
Now, fast forward, now it's about 8 years ago since we bought that building. It's probably worth triple or quadruple what we bought it for. But going in, if I would have just printed an offering memorandum and sent it to investors, they'd say, I'm not buying this thing. So you got to see what the problem you could solve is. So you can't just be blindsided by what is the actual return. We're not buying the S&P 500. We're buying assets that need, attention.
And what's the life expectancy on an asset that you buy? Like when you get into it, is it like I'm holding on to this for life, or is there?
That's my philosophy. When I get into my properties, pretty much I buy them for life. Yeah, I will sell. I very rarely sell, but sometimes I do. But ultimately, I buy them with the timeline of forever.
When you do sell, obviously this is a case by case thing. When you do sell something that you initially thought, I'm going to hold this for life, what is like a key factor that's telling you, I have to let go of this property?
Almost always it's price. The price is just so good. Every day when you own real estate, you got to decide if you're a buyer or a seller. And that's every day. It's even though it's not publicly traded, there's offers every day for your property. And if the market is offering much more money than you think it's worth, you do have to sell the property.
Makes sense. Buffett talked about that a lot. I keep going back to Buffett because this is like...
He's a good role model.
Yeah. When I was in high school, I literally read every shareholder letter that they put out, all the meetings, everything. And I'm very intrigued by it. I don't know why. I don't know why capital management to other people will seem like a boring thing, but I find... I don't know, just intriguing to me, like the compounding effect of it, the effect of that right now, you can be, it's like an exponential, as you say, exponential.
Better.
Exactly. And that's how I would believe, at least from looking at other companies, what capital management is. Now, you were once a stockbroker, right? I'd like to say you had a business baptism. You went down a trader, you went down a stock trader, and then came up an investor. You came up, I could... Why don't I buy a property? And it's actually crazy because when you did decide to tell the people that were around you, hey, I'm going to invest into this property. And I think that was, during the time that there was a recession or something, no?
It was after the savings and loans crisis. So it was 1998. In the late 80s is when the savings and loan crisis took place and people started losing properties like crazy in the early to mid 90s. And that's when there was the Resolution Trust Corporation through the U.S. government, the RTC, was just getting rid of properties, and they were selling literally for dimes on the dollar, and you could steal properties, and the government would backstop these and finance these deals just to get them off the books, and nobody wanted to own commercial real estate. And it was at everything from a small little building to skyscrapers like there used to be the old Centrust building in Miami. It was part of the RTC. So you could really get in.
So it was like buying $1 for 30 cents, 50 cents.
I went to the auction, I think it was probably it was in 1999, 2000, whatever it was. I remember being there, and not that I was looking at this property, but it was the Centrust Tower, which was a spectacular building in downtown Miami. It's still there now. I forget it was maybe it's City National Bank now, but it's the beautiful building with all the different levels. And the guy bought it for, I think it was $40 million then. And all he had to do to get the loan from the government for the entire deal was come up with $4 million. This was a building that probably cost $200 million to build at the time. He bought it, and he recently sold it about 3 years ago. I think he sold it for $400 million. He gave him $4 million to buy it. And he held it and cash flowed forever. He enjoyed the lifeline of the building the 20 years and wrote it out and made a fortune. But he came up with $4 million to buy a building that he sold for $260 million more than he paid. So that's what the late 1990s did for you. I don't know if you're ever going to see those in my lifetime again, but that was a hell of a time to be in real estate.
Opportunities. Do you believe that recession... I'm going to go back to this question. You guys don't say that I'm going to forget about it. Do you think recessions actually create opportunities for those that are not afraid to invest during a recession?
Of course, yes. As your idol Warren always says, you got to be brave when people are fearful and fearful when they're brave. So recessions create uncertainty, and uncertainty means everyone pulls their hands out of their pockets and don't want to buy and doesn't want to buy. And that's when you should be buying. When COVID first hit and prices started to come down and people got all scared, nobody wanted to buy. But once the government pumped trillions of dollars into it, you saw house prices here in South Florida double, triple, and quadruple instantly because everybody had money. But nobody wanted to buy anything in March or April of 2020, yet 1 year later, things would double and triple the price. So that's when people are afraid, you got to get aggressive.
People are afraid, you get aggressive, and vice versa. If people are aggressive, you'd be a little bit afraid.
Absolutely. Same thing.
Going back to that situation that you were a stockbroker and you decided to tell the people around you, hey, I'm going to invest into commercial real estate. Or like, you heard that guy Todd? Todd saying he's going to invest right now? Does he not see the prices going down? What did you learn in that moment about the importance of the people that are around you?
I was very young at the time compared to now. When I first bought my first property, I guess I was 25 years old. And the first thing you really learn is that people are not necessarily, how do we use this nicely, shitting on your idea, so to speak, because they don't want you to do it. They just don't understand it. And everybody has a different goal and a different mindset. So I understood the stockbroker mentality and the investment banker mentality and why they were saying this to me, because if I explain to them, look, I'm going to put $200,000 or $150,000 down on a property, and if I do great this year, I'll make $15,000, maybe $18,000 in return, 10, 12, 14% if I'm lucky. And the stock market was on fire. And they're like, you could put that money in stock and make that in a month. Why would you do that? And your money is there and you could cash out anytime you want. You buy this property, you can't cash out. You can't get your money out. You're tied up. And for that little bit of money, it made no sense.
Yeah.
Unfortunately for everybody, the stock market doesn't always go that way. And historically, it'll never go that way year after year. So you had to go against the grain. And you have to look at the people who are doing what you want to do and recognize that, yes, money will compound and you'll get wealthier, but it'll take patience. So there's just simply no way to get into the real estate world in the first year, or any investment for that matter, and think you're going to strike it rich. Yes, you could create an app or cure some disease and you'll make money, but that's not as much a business as luck. So if you want to invest in things that are known and tried and true, it's going to take time.
Another thing is not taking it too personal. I believe there's just like, even me, I had a lot of people when I was like, look, I'm going to go all in on the podcast, go all in on the marketing agency. They're like, really? But like, your dad is a commercial broker. Why don't you just go with him? Or wait, hold up. You already have the foot in the door. I was like, I mean, I'm young. I would rather take the risk now, learn what I can learn, have the opportunity in front of me. Why not go all in? But also, you can't take it too personal, because if you're doing something that other people have not done, for instance, the people around you probably have no investment portfolio at the time. So why would they understand? Why would they agree with you? Why would they say, yeah, go all in? Why would they say that?
Well, I believe there's two parts to that answer then. And the second part to that answer is, when you start telling people you're going to do something, it's not that people are necessarily haters, but there are a lot of haters in the world. They don't want to see you succeed in something that they ultimately would like to be doing. And, I started my social media about 8 months ago. And before that, I was not on social media really at all, posting anything. Yeah. And when I first started doing it, I thought it was comical. People saying, oh, you want to be TikTok famous? And I was like, it's not that. I'm not even on TikTok, but I have a team helping me do this. I mean, I do answer some comments and all, but I was like, it's not that. I'm trying to give back. And you see the naysayers, and it's funny because some of the people that critique me for doing it, like, why are you doing that? You already have a big business. I said, it's funny because now I'm watching them start to make videos. And because they saw it work for me and they saw my following grow and they realized, wow, that was actually a good thing. They secretly wanted to do this, yet they were afraid. So their fear is that if you go do this and it works, and all of a sudden you have access to all these people and this takes off and you do well, that hurts them. That makes them feel bad about themselves. And that's just the reality. I mean, you're never going to get away from that in life. People are going to do that to you at every stage.
At every stage.
At every stage. It's never going to go away.
I think the younger, especially for you guys out there, the younger you are and the quicker you get to the lesson of like, don't take it so personal. Mm-hmm. Don't I think it's that, just don't take it so personal. Like, if you want to go all in on something, go all in on something. But you mentioned something that was very important, content. I really want to get into this because you did have a transition 8 months ago doing content. Now, outward in, somebody would look at you and say, two things. You're really successful at what you do. And number two, who in your industry is doing content? You think that the broker here is selling content that is, so what, what I'm saying? Like, what was the initial thought of getting into content? Like, what was your strategy with this? Like, what was your ultimate goal that you were trying to achieve when you started the content?
That's a great question. So I always wanted to give back and help out my brother. I always say he's extremely charitable, and he donates weeks of his life to build houses for Habitat for Humanity. I always say he cleans the beaches. He does all sorts of great stuff. And I didn't do that. I just wrote a lot of checks. And the truth is, it's nice for your ego when people say thank you for a big check. but it doesn't really do anything other than give somebody money. It doesn't have the same feeling. So at our company, Current Capital, we started bringing on interns. And these were high school and college kids in the summertime. And we started training them. And I realized the impact I'm having on this young generation to see real estate. Now, I've always felt very blessed to do this. And I love what I do. And I love going to work. And I don't have to work. I do because I want to do it. But when I saw these young kids, some 17 years old, getting ready to take a license, like even my own daughter getting her real estate license when she turned 18, it was very motivating. So from there, I said, you know what? I want to reach more people. I'm going to write a book. And I started writing a book. It was very hard, very time consuming. And I wrote the book, Keeping It Real on Commercial Real Estate. And all the proceeds go to charity. So I'm happy to give it away because I'm not in the book writing business. And then I started doing a lot of podcasts like yours. And when I did that, I was reached out to by the guys from School of Hard Knocks. And I call them the 3J, Jack, Josh, and James. And these guys are incredible. And they came here and they interviewed me. We had a great time. And like, how come you don't do social media? I'm like, well, no, I do this, but that's it. So when the video went out, it went super viral. And like, they're like, man, people love you. Why are you not doing this? They said, you're never going to have the reach by books or anything like this, like you would on social media. Let us help you. So I said, you know what? If you guys are going to help me, I trust you. I love these three guys. They're all in their early 20s. I said, let's do it. Let's give it a shot. Let's try it for 3-4 months. It was like July, August we started. So I think the first ones went live in September. And I even said, well, try it till the end of the year. And it took off. And the following took off. And what really kept me wasn't necessarily getting followers. It was the questions that were coming in, the DMs that were coming in, the phone calls that were coming in. You realize that for a little bit of time a day, you're helping a lot of people. And that feels good because, like I said, the biggest myth the young generation has is that no matter what they do in work, they're going to be fine in the old days. So that's not true. You got to take responsibility for yourself. And that's one thing real estate will do. So when people want to call me or meet me or ask me questions about real estate, I love giving back because I'm so lucky and blessed to have found it. I hope everybody does. And then to answer more of that question, which you didn't even ask, but I'll go ahead with it.
Go ahead.
What's in it for me? Let me tell you, I've never been as motivated about doing real estate deals and working as I am now when I have 22-year-old kids come in my office, tell me that they're buying a building. I just had 2 guys fly in from Tennessee last week. They bought their second property. They're 24 years old. Maybe they just turned 25. Like people flying in from all the country doing deals. And when you see 20-year-olds and 25-year-olds and 30-year-olds, even much older, but these young kids dreaming about doing what I have the privilege of doing, it makes me work so hard. It motivates me because it reminds me every day I was them. And you don't get complacent. You get hungrier. And now you got to be more of a role model. So now I got to share all my deals with them and tell them what I'm doing. So it's been great for my energy in this business too.
It's ironic because most people, and I feel your mindset, and you can correct me if I'm wrong, is that you don't think with the scarcity mindset, oh, there's not enough deals that I have to like keep all of my secrets inside. Like you actually have like an abundance mindset in the sense of there's enough deals for everybody. There's enough deals for Gary Report. There's enough deals for Warren Buffett. There's enough deal for Grant Cardone. There's enough deals for Todd. Like that mindset.
Yep. There's more than enough deals out there. There's just not a lot of people who are actually going to go after them. People will go get discouraged and quit.
Do you think there's more deals than people that are going after this?
Properly going after them, yeah, there's always deals. So you need to be patient. So, I don't run a fund where I'm forced to do deals. When I buy properties, I buy a property. And if I don't buy a property, like in 2023, I didn't buy one property. 0. It's the first year I didn't buy a property in many, many years. But that's okay. I'm not forced. I don't work for a life insurance company that's obligated to invest money. It's just for me. So there's plenty of deals. There's always going to be another deal. You got to wait for the right deal. But it doesn't matter to me how many people are chasing them. And I love when all these people are looking for deals too. It just makes the stakes higher and the competition greater. I mean, you got to play the game.
I like that. Play the game. Speaking about that, when a lot of people that have reached the success that you've gotten to, that have become these billionaires, that manage these hedge funds, capital management, they kind of do see it as a game. Like allocating capital is just like a game. Okay, what gives me a greater return? What has a less downfall? What is making those type of decisions? What's your thought process when you're making a big decision like that? Obviously not talking from the logistics standpoint, but like the risk standpoint. Do you see it as more of a risk if you don't put your money into it? Do you see it, it's risky? Like, what's your mindset behind making those decisions?
It depends on the deal. So you're 100% right. This is all a game. At the end of the day, it's all a game. It's, even earning a lot of money is still a game. And some people earn more. And, like LeBron James earns a lot of rings and championships, Tom Brady. And it's just a game. That's all it really is. It's not personal. It's a game. You get to a point in life where you have enough money that doesn't matter anymore, but you want more deals. Deals are action. So if I never bought another property again, that might be okay financially, but it wouldn't be okay with me emotionally because I need action. I need to renovate a property. I need to have new tenants. I need to be growing. So I'm all for that. But with that said, because of the stage I'm at in life now, why I have a lot of friends who like to go buy art. My art is I'll go buy little buildings, smaller buildings on my own, just like a little property here and there. That might not make great economic sense because I want it, because it's Monopoly. So when you're playing the game of Monopoly and you're going around the board, and even though one of the guys has one property and the other guy has the other property the same color, you want to buy the third just to block them. I do that too. So the risk in it, not really so risky. The upside's not really so great. I just want it because, I have a lot of properties around here just because I want to see them when I drive home. They're smaller deals, but I just want to have them.
There's a new book that he came out that I read, Choosing Your Enemies Wisely. It was about like understanding that some people will, if they already surpassed you, if you already surpassed somebody and then you're still taking the motivation from what that person down there said, hey, it's going to bring you down, versus if you compare yourself to somebody up here. But another thing, like the premise of the book was business strategy, thinking about the next 5 years, thinking about the next 10 years. When you do think of the next 10 years of current capital, what is it that you're doing to make sure you stay relevant and stay in business for the next 10 years?
Well, I love Patrick. I'm a follower of his. I think he's terrific. And he's another example of a self-made guy who just
100%.
was grinding from, I remember his days in the beginning. I mean, I've obviously read his books too, selling gym memberships to where he is today. Yeah. And he's not stopping. And he has the same kind of mindset as I do. So I'm growing a company here. I'm building a legacy. And I'm only 51 years old. So I feel like I have a lot of years left to do this because I have no intentions of retiring. So the key is to keep growing and doing more of the same, just on bigger scales. So now I'm buying properties that are tens of millions of dollars, where years ago they were just millions, and many, many years ago they were hundreds of thousands. I will still buy a property for a couple of $100,000, even though it might not make a lot of sense as far as the distraction goes, but it's fun. But ultimately the goal for me is to get to a point where I could be doing deals that are north of $100 million. Not for any other reason other than it's a game. And I've done deals for tens of millions, so that's the next inevitable step. Can you get it done? And if you look at big funds in New York City, whatever, these guys are buying properties. It could be $1 billion worth of properties. I don't know if I'll ever get there, but I'll keep pushing, pushing it down the road so I could keep doing bigger and better deals. Inevitably, we'll keep growing this company. We have a lot of brokerage here. We do a lot of leasing here. We do property management. So we'll keep growing and adding people. And that's very rewarding to me as a business owner, because all these people's livelihoods dependent upon the decisions I make. If I screw up, these people have no job. But as long as I keep doing well, we keep hiring more people and adding to our family. And I love that reward. I love to work with all these people. It's a gift to be able to come in with them. So for me, the goal is more of the same, just on a bigger and better scale.
Let me ask you, would you ever get into stocks?
As far as investing or as a broker?
Investing. Like, part of your asset class includes...
So it does. I won't say I'm not invested in stocks. For the most part, I invest in funds because it's just too challenging to pick stocks, trade by trade. Now, if I tell people, if you love a company and you believe in a company, that's one thing. If you love Starbucks and you want to buy it, I get it. But to beat the S&P 500 or to beat Vanguard funds, it's almost impossible. I own a lot of stock in Berkshire Hathaway. I could never get access to the deals that Berkshire could get, and I don't have their resources. To give you an example, when the market tanked years ago, what was it, probably 2008, 2007, when 2000, right around then.
Somebody called Warren up.
Yeah, it was Jamie Dimon, all these guys from Bear Stearns. They're all calling Warren Buffett to cut deals with him, and he's lending out money 12 to 18%, and he's getting preferred stock, he's getting everything. That's never available to you at any level, but as a Berkshire investor it is. So I will invest in those kind of things. As far as trading stock goes or trading cryptocurrencies, just a distraction, would never do it.
It's really powerful, because I think there's a lot of you out there, and I truly do believe there's a lot of people out there that we're living in an era of like trading, and there's always been trading, but now more than ever, that's like the new business. Marketing, trading, and then network marketing. That's like the businesses that are flourishing right now. And a little like you said, to get to that Warren level where you're getting deals that I cannot get, you cannot get. Like, Warren is literally the singular person in this planet that is getting a deal like that, like you said, they're getting equity stake, then they're lending out money at 18% interest. Like, he's the only body getting that deal. But I also do believe what you're doing right now is still contrary to what society is pushing out in terms of trading, in terms of quick money, in terms of like, hey, you can make a 200% return on a trade today. Why would you think about making a 15, 10, 8% return on real estate when you can make 20% today? You know what I'm saying? So I truly do believe what your story and your lessons and everything comprises of, and I want to read your book actually, is compounding. Compounding, like you said, you still buy the smaller deals ultimately to get you to the bigger deals of buying deals that are north of $100 million. But compounding your investments, compounding your decision making, compounding the relationships you make, compounding the key hires that you make, and just ultimately being consistent with that. You can correct me if I'm wrong, but
I think you're right. And it's very important that you stress this, especially to your viewers. I'm talking to all you young viewers out there specifically. You guys get caught up in social media and you start to believe things as reality that I didn't have to deal with. I remember back when I was your age, there was no social media, but we would call guys that had all this fancy stuff, because that always existed in the gold Rolex and the fancy car. We would call them $1,000 millionaires because they had $1,000 but lived like a millionaire. The problem you have now is you guys go on social media and you see stuff and your generation believes it's true. Yet, when I talk to you again, generation, you know that everybody's photoshopping pictures, everybody's full of it, everybody's renting cars and taking pictures, but they see it and they start to feel insecure about themselves. Like, yeah, but Joey's 26 and Joey just bought a Lamborghini. Joey didn't buy a Lamborghini. That's a picture. And it's getting in your generation's head that everything has to be so fast and it has to happen overnight. And again, yeah, if you put on the TV, you're going to see some guy's going to create something, become a millionaire, a billionaire overnight. Luckily, there's going to be a lottery winner. But what you really should focus on is find guys that are true business legends that have been doing this for 30, 40 years and see their path. You like to talk about Warren Buffett, but Warren Buffett didn't become super rich like
your 50s.
Right.
50, yeah.
It doesn't happen quickly. So I don't care if you want to own an aircraft equipment parts company, if you want to be in the stock business, if you want to be in real estate, forget about all that nonsense you're saying about everyone going to the fanciest restaurant and everybody doing this. It's really not real. And even at my age, I know a lot of people who are in their 50s who are still perpetrating a fraud on social media. Don't buy into it. Everybody's not on vacation every week. Everybody doesn't have a Bugatti and everybody doesn't have a fancy watch. Worry about yourself. Stay in your own lane. If you really, truly want to get rich, like you keep saying, compounding, it's going to take time. It's going to take a lot of hard work, but look at those who have actually done it that you know they've done it. The kid with the Lamborghini, that's not his. Well, it could be, but it's most likely not his. Look at the guys who've been successful generations, decades. You like real estate, copy guys like George Perez in Miami, copy guys like Don Peebles, copy guys like, Renan Katz or Jim Batmazy. These are the icons in that business. Patrick Bet-David, you brought him up before, an extraordinary example of a guy who started with nothing and is building this legacy and dynasty of companies. Look at him. A good friend of mine I love, Damon John, the Shark. Damon's extraordinary. Look at these guys and ask them, did you get rich overnight? And they didn't. They have everything now. They have all the trappings of wealth, but they didn't get rich overnight. That's who you need to follow. And don't get caught up in the social media world.
I love that you say that, because that's the mission statement of what I started this podcast. I notice that people, and that's why actually, the exact reason that I started this is because I saw a guy like Warren Buffett. I saw that he's putting so much free information out there, shareholder letters, shareholder meetings, that I know less than 0.01% of high schoolers would ever watch that in their life. I'm like, bro, that's literally like, if there was anything gold that wasn't gold that is gold, it would be that. Right. Because of the amount of information and access that he's giving you. And I started this because I was curious about learning from the real-time players, from a guy like you, from George Perez. I actually reached out to him. People like, what's the other developer?
Well, there's so many.
No, there's so many. There was like 5
great developers down here.
There was a couple developers. One in super.
Oh, Armando Codina, maybe?
Not Codina. There was somebody that interviewed him. The other one that did a Shoma Bazaar.
Oh, yeah. Mashad Soji?
That guy.
Yeah, he's a monster.
Yeah.
All monster in a good way.
Yeah, no.
I mean like a monster.
Yeah, monster in business.
Careful what I say.
Monster in business. But yeah, those type of people, that have had real life success, that's who I think the younger generation should learn from. And I think there is sort of a shift happening. A lot of what James is doing with the Hard Knocks, I really do believe that there's a shift happening and people are starting to realize, hold up, like you said, just because that kid has a Lamborghini, just because he has a life that you see, doesn't mean he really has a business knowledge. Doesn't mean he understands how to allocate capital. Doesn't mean that he's been doing it for 20 years. I'd rather learn from somebody that's been doing it for 20, 30 years. Right. That I know understands the underlying principles of business and not just how to get rich quick, how to whatever it is that's going on today. And I really thank you for your time. And this is one of the best, most fun podcasts that I've had, because
right.
a lot of people are like entrepreneurs, executives, the athletes, but I'm like, I was an athlete, but I don't understand the UFC to the extent where I can go deep on the UFC. Mayor, I don't understand politics so much where I can go deep on that. Executive, yeah, I can ask them questions, but an investor, that's what I want to be. I want to get into capital management. So I'm like curious and I'm extracting the gold, because I do think you really do have that heart to push out value. Because I don't know, you can correct me if I'm wrong, but a guy like you don't really need to do social media. A guy like you don't, like you said, you donated on the proceeds from your book. You don't really need to do the things that you're doing. And so if somebody is doing it, that they don't need to do it, should put a little like a light bulb up, whether they have 100, 200, a million followers. Like, hold up. Maybe they're doing this because they're actually giving free value away. Maybe they're doing this because they really want to do it and there's no gain in it for them. And so for that, I really thank you for your time. I thank you.
Well, I admire you too for doing what you're doing. You're a young guy. You're well on your way. And a lot of the things you're thinking, I actually probably should have said this too, like even with real estate, I wouldn't have dreamed at 23 I was going to be in the real estate business. It wasn't until right around 24 I started even thinking of the idea. And at 25, I bought my first property. And by 30, I was totally immersed. So like, when you're very young, leave all the doors open. You have a lot of options and go after all different options, but don't stress yourself. What am I going to do the rest of my life? When you're in your 20s, that's when you should be figuring out what you love to do, and you'll figure it out. But just because you graduated college with a degree in accounting or science, that doesn't mean that's where you're going. It just doesn't mean that. So be patient, find your path. But yeah, 100%. Look at guys that have built true successful careers over a lifetime, who aren't on social media just showing them their yachts, but guys that are provable and bankable, and emulate them. Their success will leave clues.
That was the best way that you could have. Success leaves clues. Success leaves. Oh my gosh, that's going to be the title, I think.
We're going to wrap it up.
That was amazing. Seriously, I thank you for your time, and I hope you guys, if you guys did make it to the end, check out the Instagram. I'm going to tag everything so you guys can see great content that he's putting out. Very straight to the point, understandable, digestible. You're not talking from 30,000 feet in the air. You're like bringing it down, and where I watch it and I'll be like, makes sense. He's talking about investments in a way that I would understand it. Awesome. So I really appreciate you guys making it to the end. I love you guys. I really do. Thank you. Check out the Instagram for the clips, Leaders Talk Podcast. Also check out his book. I'm going to link everything. It's on Amazon as well too, right?
Absolutely.
I'm going to put the Amazon link so you guys can check it out if you are interested in investments and capital management and commercial real estate and anything about making money. Got to read this book. I'm going to read it. 100%. I'm gonna reach out to you when I read it. I'm gonna give you a review. But guys, thank you for making it to the end, and I'll see you guys on the next one.
Thank you so much. It's been a pleasure.